Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 3 of December 2024. The Indian Income Tax Department has recovered Rs 37,000 crore over the last 20 months from individuals who failed to file returns despite having taxable income. Analysis of high-value transactions like property and luxury purchases revealed discrepancies. A stricter tax collection system aided in tracking these transactions, leading to recoveries, including Rs 1,320 crore from those engaged in high-value deals. Developing nations already set for a turbulent 2025 are having to cope with ballooning interest payments on $29 trillion of debt that built up over the last decade. A record 54 countries are spending more than 10% of their revenues on interest payments, according to the United Nations. Some, including Pakistan and Nigeria, are using more than 30% of revenue just to pay coupons. The sum, around $850 billion in total last year for both foreign and local debt, is forcing countries to divert money from domestic spending on hospitals, roads and schools while raising risks for emerging market investors. Indian companies raised a record-breaking Rs 1.21 lakh crore through qualified institutional placements or QIPs in 2024, a twofold increase from the previous year. Strong market conditions and high valuations fueled this surge, with 82 companies utilizing QIPs until November. Major players like Vedanta and Zomato led the fundraising, bolstering financial reserves and capitalizing on positive investor sentiment. QIP is one of the quickest products to raise funds from institutional investors. It is designed for listed firms and investment trusts, which allow them to mobilize funds quickly from institutional investors without the need to submit any pre-issue filing to market regulators. Ahead of the GST Council meeting on December 21st, payment gateway operators have submitted representations to the Finance Ministry, opposing the proposed 18% GST on commissions earned on digital payments below Rs 2,000. Operators argue that the levy could hinder the growth of digital transactions, especially in smaller towns and rural areas, by shifting the financial burden to merchants. Currently, payment aggregators charge fees ranging from 0.5% to 2% for processing credit and debit card payments. They are exempt from GST on transactions under Rs 2,000. But the Fitment Committee views these firms as intermediaries rather than banks, warranting the proposed tax. Pharmaceuticals, FMCG and oil and gas were among the top hirers of niche profiles like artificial intelligence and machine learning, cybersecurity, cloud computing, data science, and big data analytics and blockchain in 2024. Due to the increased demand for these profiles and the shortage of experienced talent, companies led by Global Capability Centers or GCCs paid up to 30% higher salaries for these profiles, bringing the average pay appreciation to around 20% over 2023. As companies move to digitize their operations and processes, enterprises are increasingly using a hybrid model where they not only outsource a part of their digital services requirements to ITS companies, but also growing their own tech talent pool, resulting in increased demand for these profiles. Cryptocurrencies are capital assets, and any profits made on their sale prior to the 2022 rules laid down by the government should be considered capital gains and taxed accordingly. The Income Tax Appellate Tribunal has ruled. The decision is significant as it recognizes virtual digital assets as capital assets. Any income from the sale or transfer of virtual digital assets from April 1st, 2022 onwards is taxable at the rate of 30% plus surcharge and cess, following the government's latest notification. Moreover, since income from the sale of cryptocurrencies is to be taxed in line with the provisions applicable to long-term capital gains, the tribunal directed the assessment officer to allow the person the deduction benefits as applicable under the law. The IASB has completed the technical work on the revised IFRS Practice Statement 1 set for release in 2025. The update aims to improve reporting on value creation, cash flow, and align with sustainability standards. The Income Tax Department has intensified its scrutiny of foreign income and assets held by Indian taxpayers. Notices are being sent to employees of multinational corporations holding employee stock options from foreign parent companies, especially those who fail to declare dividend income or ownership of such shares in their income tax returns. Tax authorities are leveraging information sharing agreements with countries like the USA and UAE to identify ownership details of foreign assets. The announcement made by Dixon Technologies to set up a joint venture with Chinese mobile maker Vivo, in which the former will have 51%, could help the homegrown electronics manufacturing services player to grab over a fifth of the country's 288 million overall mobile phone assembly market and close to a fourth of the smartphone sweepstakes. The deal with Vivo will help Dixon increase its share of the smartphone assembly business to around 22 to 23% and give the firm control of more than fifth of the phone assembly market. The tax liability of several Indian companies which have operations in Switzerland, including bellwether IT and pharma firms, may rise with the Central European country announcing a decision to increase the withholding tax on dividends their Swiss arm pays to Indian parents under the source rule from 5% to 10% effective January 2025. Switzerland cited a 2023 ruling by the Supreme Court in Nestle India case for the move. The Supreme Court ruled that the bilateral double taxation avoidance agreement between the countries doesn't automatically entitle it to a lower withholding tax in India for dividends transferred to the Swiss parents unless a notification to this effect is issued by the Indian tax authorities. Lubrizol Corporation, a Berkshire Hathaway company, and a specialty chemical firm has big plans for India. Close on the heels of its $350 million investment in the country, the company specializing in delivering sustainable solutions aims to double its business in India over the next 5 years and actively expanding its global capability center in Pune. After recently hiring 100 people, it targets absorbing another 250 to the 600-strong employee base in India. The Securities and Exchange Board of India or SEBI on Tuesday barred foreign portfolio investors from issuing offshore derivative instruments or ODIs, locally referred to as participatory or P-notes, which have an India listing security as an underlying asset. Additionally, the regulator prohibited overseas funds from hedging ODIs with derivative positions on Indian stock exchanges. Furthermore, SEBI asked foreign portfolio investors issuing ODIs to obtain ownership information of all the investors holding such instruments. India's venture capital landscape is experiencing a shift. Despite raising $2.5 billion in 2024, investments remain cautious, totaling $10.9 billion. Executive churn is high, with senior figures leaving established firms. Smaller funds are stepping up early-stage investments as global giants pull back. This cautious approach marks a reset from the 2021 boom, impacting deal flow and investment strategies. Shriram Finance, India's second largest NBFC, is in the final stages of raising $1.27 billion in a multi-tranche, multi-currency loan expected to be the biggest such external commercial borrowing or ECB deal involving a local non-bank lender. The loan, with maturities of 3 to 5 years, diversifies Shriram's funding sources amidst tighter RBI regulations and will support its lending business, including expansion into MSME financing. SEBI has notified the SEBI Listing Obligations and Disclosure Requirements 3rd Amendment Regulations 2024. The major changes include A. Mandating secretarial audits to be conducted by a secretarial auditor who must be a peer-reviewed company secretary. B. Making publication of financial results optional. C. Introducing detailed norms governing the eligibility, qualifications, and disqualifications of secretarial auditors. And D. Prescribing a cooling off period for secretarial auditors. The Central Board of Direct Taxes or CBDT has launched an electronic campaign to assist taxpayers in resolving mismatches between the income and transactions reported in the Annual Information Statement or AIS and those disclosed in income tax returns for the financial years 2023-24 and 2021-22. This campaign also targets individuals having taxable income or significant high-value transactions reported in their AIS but have not filed income tax returns for the respective years. The initiative is part of the implementation of the E-Verification Scheme 2021. India is likely to impose a safeguard duty or temporary tax of up to 25% on steel imports. Small manufacturers consuming about 1 million metric tons of steel annually are expected to benefit from the arrangement, with prices about 20% lower than market rates. India, the world's second biggest producer of crude steel, became a net importer of the alloy in the financial year to March 31st, with imports surging to a record high during the first 7 months of the current financial year. Inflationary pressures are set to upend household budgets, potentially worsening stressed urban demand. Starting this month, fast-moving consumer goods or FMCG companies such as Hindustan Unilever, Godrej Consumer, Dabur, Tata Consumer, Parle Products are rolling out price hikes to offset higher commodity costs and increase custom duty. The entire basket from tea and edible oil to soap and skin cream will be 5 to 20% more expensive, marking the biggest price hike in 12 months. Companies' production costs have swelled due to 22% increase in import duty on edible oil this September and up to 40% in calendar year 2024. In 2023 too, the cost of key commodities such as sugar, wheat flour, and coffee had surged. The government is firming up a zero collateral housing loan scheme for low and middle class income groups, which will offer up to Rs 20 lakh with minimal documentation or third party guarantee. Amendments to the Credit Risk Guarantee Fund scheme for low-income housing are being examined to pave the way for the scheme, and the loan could have a tenure of 30 years. Under the existing provisions, housing loans up to Rs 8 lakhs are eligible for guaranteed cover. The idea is to make credit available for those home buyers who do not have any documented income or minimal supporting documents. Earlier, the SEBI had notified the norms with respect to pro rata and pari passu rights of investors of alternative investment funds or AIFs. Now, SEBI has specified that the investors that has defaulted on providing his or her pro rata contribution for the said investment will not be eligible for pro rata rights. Further, the requirement of maintaining pro rata rights of investors shall be applicable to the extent returns or profit on the investments is shared by an investor with the manager or sponsor of the AIF. SEBI has notified SEBI Mutual Funds Third Amendment Regulations 2024. A new Chapter 6C relating to Specialized Investment Fund has been inserted. It states that a specialized investment fund must not accept from an investor an investment amount of less than Rs 10 lakh across all investment strategies in the manner as may be specified by the board. A specialized investment fund means a mutual fund as defined under Regulation 2 and subject to specified conditions. The Securities and Exchange Board of India or SEBI approved tighter regulations for listing of small and medium enterprises or SMEs, broadened the scope of price-sensitive information, and overhauled regulations governing investment bankers. Amid investor frenzy in SME fundraising, the market regulator has decided to raise the eligibility norms to ensure only companies with sound track record raise money from the public and get listed. An issuer shall make an IPO only if the issuer has an operating profit or earnings before interest, depreciation and tax of Rs 1 crore from operations for any of the 2 out of 3 financial years at the time of filing its draft red herring prospectus. SEBI has also limited the offer for sale size by selling shareholders to 20% of the total issue size, while a selling shareholder cannot sell more than 50% of their holdings. SEBI will also be extending the related party norms and regulations on promoter lock-in to SMEs. The Income Tax Department is investigating around 20 wedding planners in Jaipur for suspected tax evasion of approximately Rs 7,500 crore. The investigation focuses on cash transactions and the use of mule accounts and fake bills. Scrutiny may extend to foreign destination weddings and associated foreign exchange regulations. Indian companies have raised more money through overseas borrowings till October this year than in the entire of 2023. Fundraising through foreign currency loans and bonds exceeded $32 billion by October, compared with $25 billion last year. Non-bank finance companies led the charge, borrowing over $16 billion, primarily for on-lending. High US interest rates didn't deter borrowing, with many companies prioritizing access to larger loan sizes and managing rupee exposure. SEBI has proposed Mutual Fund Investment Tracing and Retrieval Assistant or MITRA, a platform developed by RTAs to help investors locate inactive or unclaimed mutual fund folios. This will allow investors to identify overlooked investments, encourages investor KYC compliance, reduces unclaimed mutual fund folios, and mitigates against fraud risks. Public comments are invited on the draft circular, latest by January 7, 2025. The 55th GST Council meeting on Saturday may provide relief to intermediaries such as brokers, agents, and online bidding portals that offer their services to entities abroad. This will be done by classifying them as exporters, making them zero rated. At present, intermediary services are charged at 18% under the Central GST Act. According to sources, the Fitment Committee of the GST Council has proposed an amendment to the Integrated GST Act by deleting Section 13, Subsection 8, Clause B. This amendment would alleviate the financial burden of the 18% GST currently imposed on these services, thereby creating a more level playing field for Indian intermediaries in comparison to their foreign counterparts. Direct-to-consumer dairy and daily essentials brand Country Delight has become the latest entrant to the 10 to 15 minute delivery space. The Gurugram-based company has started quick delivery in some areas in the NCR and is likely to expand it to other cities soon. The company already has a rapid delivery service which delivers dairy products to customers within 30 to 40 minutes of placing the order. In January, the company secured $20 million in Series E funding, valuing it around $820 million. In October, it secured another $24 million in debt from Altiria Capital. India could spare gift vouchers offered by companies, particularly in the retail sector, from the levy of goods and services tax. The GST Council, the apex decision-making body for indirect tax, is likely to take up several issues, including the tax on gift vouchers and insurance products, besides increasing the levy on used cars, including electric ones, to 18% from 12% now. It's also likely to clarify the levy of tax on food delivery apps and flavored popcorn. The National Stock Exchange brought into effect stricter eligibility norms for listing of small and medium enterprises, just a day after the Securities and Exchange Board of India in principle approved them in a bid to protect the interest of retail investors. Usually, the norms are brought into force after the market regulator notifies them, but NSE has stepped up and made the norms effective from December 19th, although the SEBI norms have got just in principle approval and are yet to be notified. The market regulator Securities and Exchange Board of India on Friday directed stock exchanges, clearing corporations and depositories to adopt a uniform policy for sharing data meant for research and research publications undertaken by accredited academic institutions. These market infrastructure institutions or MIIs have been asked to segregate such data into two baskets. One that can be shared with public and the second that cannot be made public. The Institute of Chartered Accountants of India has announced that the results for the CA final examinations conducted in November 2024 are expected to be released on Thursday, 26th December 2024, late evening. SEBI has proposed a draft circular aiming to facilitate the participation of retail investors in algorithmic or algo trading, which has traditionally been restricted to institutional investors. This move responds to growing retail demand for algo trading while maintaining market integrity and investor protection. The draft outlines responsibilities for stakeholders, including investors, stockbrokers, and algo providers. Key measures include the tagging of algo orders with unique identifiers, the requirement for brokers to supervise algo trading. The Department of Telecommunications is set to issue bank guarantee waiver letters to telecom operators, offering significant relief to Vodafone Idea. This move, awaiting final approval from the Communications Minister, will waive over Rs 24,700 crore in bank guarantees for Vodafone Idea, enabling the telecom company to secure loans for network expansion and 5G rollout, boosting competition against rivals. Shriram Finance launched a new green finance vertical with a Rs 5,000 crore AUM target over 4 years. The initiative will focus on financing electric vehicles, charging stations, and renewable energy products. The company aims to increase its electric two-wheeler financing market share from 7% to 20% and will initially target Karnataka, Kerala, NCR, and Maharashtra. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.